Welcome back, everybody. Sive Morten is here with the forexpeacearmy.com. So let's keep up with the analysis of the crypto markets. So there are a couple of moments that seems important right now, and the thing that is most important is stands on the weekly chart. On the monthly chart, the one thing that I have changed here since our recent discussion is I have updated the pivot points for the year. And most interesting stuff has happened right in January. You can see that market has tested the yearly pivot point 2026 and is pulling down. So while the market, at least based on purely on the pivot points framework, if market stands below the pivot, whatever pivot you use, monthly, depending on the scale of your trend, monthly, weekly, or as we do here, yearly pivot, if market stands below it, the sentiment remains bearish. So the sign of the changing of the sentiment is breaking through the pivot. Correspondingly, if market fails to break the pivot and start downward action, it is really high chances that it will test the yearly pivot support one, which is actually around 66. So if you remember last year, the pivot was standing around 126, and that was precisely yearly pivot resistance 1, where the market has retested it and shows the pullback. Now we're testing the new pivot for this year, and what will happen around it might be important. So that's just a single update on the long-term chart. Now we're coming to the most interesting things. If you remember last week, we said that keep an eye on what will happen, how market will flirt with the MACD predictor line. It might be that the bearish pattern will remain here. And second is we could get the grubber. And we indeed have got it. This is bearish pattern, and it suggests drops below these lows. So it might put the foundation for possible downward continuation. At least currently with this pattern in place, we are not considering any new longs. So here market could break it up. If market will break it up and erase the pattern, that will change the story. But currently, this pattern is too important just because it stands on the weekly chart, and that keeps us aside from considering any new longs, at least for investment purposes. If you trade on the high time frames, such as a weekly or daily, at least, it's better to stay aside from taking any new longs until the clarity with this pattern will come. From the fundamental background, it's absolutely reasonable this time of the performance. Why? Because the escalation and geopolitical escalation is rising. Investors are worried, and Bitcoin and all cryptocurrencies is the most risky asset, which has really great volatility, but it has doubtful return. So due to these features, Bitcoin and other cryptos actually are not very desirable asset in the portfolio. And in the difficult times, it will be the first candidate for cutting its shape in a portfolio. And actually, things that we see currently, the escalation, trade war starting with the European Union as well, there's all the stuff and mess around Greenland and so on. So it's not really improving the overall sentiment in the markets, and it's actually it's a warning sign. And with under pressure of these risks, investors have to cut the share of the most risky assets in their portfolios. These assets are really good when everything stands quiet and all performs well. It's prosperity times. Investors more desirably spending money on a risky asset. But in the current situation, it leads to the opposite activity, and you can see what's happening. On the daily chart, that's the same. So as we said, yes, market has completed 98 ABCD retracement, but we could get the Carter's T2, and from that point of view, it doesn't guarantee that this is reversal. It more looks like the retracement on the big drop, ABCD retracement, and now market is ready to keep going lower. That's what we have on the technical picture. Currently, market is dropping below the MACD, so nominal trend here is turning bearish, although this candle is not closed yet, so we need the confirmation on the close price. But anyway, currently you can see that's probably we will get it. So here we have also nominal bearish trend, and this is also a reason why we do not have even theoretical reasons to consider any long positions by far. So how you could actually deal with the current situation? Our advantage, I suppose, is that market stands very close to the top because we're considering weekly pattern. And that led us to plan the trade based on the weekly pattern with the stops above the stop with the minor retracement here. So on a 4-hour time frame chart, we already talked about this pattern. We said keep an eye, for example, it might take the shape of the hand and shoulders, because here we've got the butterfly, and very often butterflies become the part of the hand shoulders. Now market stands on the point where maybe it is not very attractive to take the position right now. So here you could wait either for a minor pullback. So actually, generally speaking, the task is very simple. You need to take the position as close to the top as possible, just to minimize your risk. Depending on your skills, how you will be able to do this depends on your risk. So if you take position, for example, around 97, your risk will be very small. Any other compromises, well, this will increase your risk. But you could follow in a few ways. So for instance, you could wait either some minor pullback here, try and take position, some retracements. Market is promised to be really volatile on this week. Or you could follow with the big pattern, because we're actually dealing with the weekly pattern, weekly grabber. It probably will form something really extended on lower time frames, and actually 4-hour time frame chart is definitely the one that we could use for these purposes. So for instance, I won't be surprised if we'll get this hand shoulders pattern. In this case, you will have to keep an eye on an area around 95. So here is potential top of the right arm, and you could try and take position here with the stops above this area, but at the same time you could try to monitor some minor patterns on the top and start some reversal patterns here on lower time frames, which could lead you to place your stop just above the right shoulder. This is also some advantage might have. The problem with this is that theoretically we can't exclude the situation where market will just collapse and you will not get any right arms. This is actually the backside of this medal. So some compromises that you will have to accept. This is market, and actually you can't find riskless and absolutely perfect situation. So that's probably all for now. Situation has become very interesting. We have the big patterns, really big patterns, and that could last for weeks for trading. And if we know the direction for weeks, it's really could make the real pleasure to trade it. So let's see. We will go back to our discussion of the Bitcoin as usual on Thursday.